Computation of income from business. Section 28 to 44 of the IT Act deals income from business and profession and depreciation. First, business refers to the purchase and sale of commodity with a view to earn profit. It includes any trade, commerce, manufacture, or adventure. It does not compulsory the transaction should be continuous and permanent in nature. How to compute taxable income from business? Let we see the provisions of the IT Act. First, we have to take net profit as per profit and loss account. Add disallowed expenses are also called inadmissible expenditure. Section 28 to 44D. What are all they? First one, all personal nature expenses like interest on capital, income tax, wealth tax, gift tax, drawing, household expenses, house property taxes, LIC premium, etc., etc. Second, all capital nature expenses like purchase of asset or extension of premises, etc. Other Income Tax Act provisions, it is important. First one, expenditure on scientific research to laboratory, university or any institutions. Under section 35, 100% allowed. No need to add any amount with the profit. Second, expenditure on acquisition of patent right or copyright. Under section 35A, 25% allowed. That means no need to add 25%. But balance is 75%. That means 3/4 to be added with the profit. Third one, expenditure on technical know-how. Section 35AB. 25%, that means 1/4 allowed, balance 3/4 disallowed. Disallowed items we have to add with profit. Fourth one, expenditure on eligible projects or scheme approved by section 35AC, 100% allowed. Amortization of preliminary expenses, section 35D, 1/5, that means 20% allowed, balance 80% disallowed. Next one, contribution to rural development program under section 35CCA, 100% allowed. Next one, contribution to conservation of natural resources under section 35CCB, 100% allowed. No need to add. Next one, contribution to agricultural extension projects under section 35CCC, 100% allowed. Next one, contribution to skill development programs of the central government schemes under section 35CCD, 100% allowed. Next one, interest payment to close relatives, interest paid to wife, interest paid to brother or son, father, mother. Under section 40A to 100% disallowed. Disallowed means we have to add with the profit of the business. Next one, cash payment which exceeds 10,000 under section 40, subsection A3, 100% disallowed. Next one, provisions for gratuity or bad debts, etc. Any provision debited in the profit loss account under section 40, subsection A7, 100% disallowed. We have to add with the profit. Next one, contribution to any fund, that means donations or contribution to staff welfare fund, etc., etc. Under section 40, subsection A9, 100% disallowed. Next one, outstanding expenses due after the due, outstanding taxes due after the due date of filing, section 43B, 100% disallowed. Overvaluation of opening stock or undervaluation of closing stock, 100% disallowed. Any penalty or late fee charged by any one of the Indian Act to the businessman, 100% disallowed. Fixing of neon signboard for advertisement purposes, 100% disallowed. Any payment to outside India without TDS, 100% disallowed. With the overall total less in the profit loss account credit side items, what are all the business natural incomes? Leave it. Other its related incomes to be deducted here. That is incomes chargeable to other rates of income and other allowed expenses of business. What are all they? Number one, rent from house property. It was taxable under house property, so no need to show house property income under business. Just same like income from other sources like interest received, dividend receipts, royalty receipts, and other casual incomes and raise winnings, etc., etc. Next one, profit on sale of asset. It was taxable under capital gain, so no need to show under income from business. Next one, depreciation under income tax rules 1962. Anything was given the adjustment, that adjustment depreciation will be deducted here. As per profit loss account, we have to add above. Last one, undervaluation of opening stock or overvaluation of closing stock, we have to deduct here. Then only we can get the exact income from the business of a businessman. So just to go through this format and we can solve any problem of the income from business. Let me see practice 1. Mr. Ganapati prepared the following profit loss account. Income by gross profit 2,60,000, by gift received from friends 2,500. Here expenditure side, salary and wages, rent and taxes, household expenses, income tax, advertisement, printing charges, gift to employees, fire insurance, LIC premium, audit fee, and the balance net profit 1,69,500. Actually this businessman shows his business profit as 1,69,500, while computing income from business as a auditor, as a investigator, we have to carefully watch whether the expenditure debited were 100% related with the business or not. If all the items debited in the profit loss account were related, that means it has a business entity, means no need to add that expenditure with the profit. Otherwise we have to add the items. For example, here debit side, salary and wages, business nature, allowed, no need to add with the profit. Rent and taxes, allowed. Household, it's a complete personal nature, so we have to add with the profit. Let me start the answer. Please watch me step by step. Compute taxable income from business. Computation of taxable income from business of Mr. Ganapati. First step, net profit as per profit loss account 1,69,500, which was shown in their financial statement. Add disallowed expenses or inadmissible expenses, section 28 to 44D. We have to see first in the debit side, one by one item. Salary and wages allowed. Allowed means business nature. It has business entity. No need to add with the profit. Next one, to rent and taxes also business nature. Household expenditure, it's a personal nature. So we have to add first item. Second, income tax, actually GST, only the business nature tax. Income tax is a personal nature of businessman. So it is also disallowed. Add with the net profit. Advertisement, it's a business nature. Printing charges, also business nature. Gift to employees, also business nature. It is a business promotion nature. Fire insurance, the stock. Every businessman may take insurance on the stock. Okay, to avoid the fire accident risk. Fire insurance is must for nowadays, so it is also business nature, allowed, no need to add. LIC premium, it's a personal nature of the businessman. So these household expenses and income tax and LIC premium has no any business entity. These are all the personal expenses of the businessman, wrongly entered as a business nature. That's what these items were disallowed. Household expenses, income tax and LIC premium. So all the debit part we finished. Now we go for the credit. Gross profit, business nature. Okay, next one, by gift received from friends, it is a personal natural income, so that should be deducted. So the actual business income was 1,75,000. It is a pure business income, but that accountant wrongly shows net profit as 1,69,500. This is the basic problem. If you understand the concept of the first problem, all other problems will be very easier to understand. In the same pattern, the listeners can practice exercise 1. Now, Practice 2. Mr. Balan prepared the following profit loss account. By gross profit 14 lakh 80, by rent from property 72,000, by dividend 6,000, by interest on post office saving bank account 2,400 a year. Four incomes are shown in the credit side. Gross profit, business nature. Rent from house property, it was taxable under income from house property. So this income will be deducted from income from business. Dividend, income from other sources item. Interest on post office saving bank account, also income from other sources items. So these items also be deducted from income from business. That's what I deducted this one. Less income chargeable to other rates and other allowed expenses. House property rent 72,000, dividend is 6,000, interest on post office saving bank account 2,400. Now, actually in the previous one no adjustment, but here in this problem two adjustments are there. Before that, we can go through one glance the debit side of the profit loss account. Salary and wages, rent and taxes, bad debts, advertisement, everything were business nature. Provision for bad debts, any provision, it was not allowed. It's a disallowed nature under section 40, subsection A7. Charities, any contributions, it was not comes under allowable nature of a business, so it is also disallowed. Fire insurance, business nature. Interest on capital, interest on loan is business nature, but interest on capital is personal nature, disallowed. Contribution to staff welfare fund, no fund contributions. Any contribution to fund 100% disallowed under section 40, subsection A9. Depreciation allowed. General expenses allowed. This businessman shows a net profit of rupees 6,50,600. Based on the adjustments, shall we check the actual income from business? The adjustment, first one, depreciation as per income tax rules amounted to 7,000. So what is the depreciation already recorded in the P&L account? 9,000. So as per P&L, this 9,000 will be disallowed. As per adjustment, in depreciation as per income tax rules, 7,000, that should be deducted. It's the first point. So shall we start the solution, please? Net profit as per P&L account 6,50,600. Add disallowed expenses. First one, depreciation. The item debited in the P&L account added. The item shown in the adjustments was deducted. Second, general expense include 12,000 being balance drawing. So what is the general expenses debited in the P&L account? 25,400. In this 25,400, 12,000 related to drawings, personal nature. So 12,000 only disallowed. See? So only two adjustments. We finished the adjustments first. After completing the adjustments, now we have to go to the debit side of the P&L account first. Salary and wages allowed, no need to add. Rent and taxes allowed. Bad debts allowed. Advertisement allowed. Provision for bad debts disallowed, 15,000. Next, charities. Under section 40, subsection A7, disallowed, 8,400. Next one, fire insurance, business nature. Interest on capital, personal nature, that should be added. Next one, contribution to staff welfare fund 5,000, personal nature, added under section 40 and IN. So all the debit side we finished. Now in the credit side, rent from property, dividend, interest on post office savings bank account, all these three incomes chargeable under other heads of income. So we deducted. So the actual income from business is 6,18,600, but the businessman shows here 6,50,600. So the purpose of computing income from business is to check whether the actual income from business for the tax purposes only we covered here. In the same pattern, the listeners can practice exercise 2. Now we'll see. Practice 3. Mr. Khan prepared the following profit loss account for the year 31st March 22. Compute the taxable income from business. In the income side, by gross profit, by commission, by rent from property, by dividend, by bad debts recovered, by sundry receipts, totally 6 items are there. In the debit side, salary, office expenses, rent, acquisition of patent right, Patent right and copyright under section 35A, 1/4, that means 25% allowed, balance 75% disallowed. Provision for bad debts under section 40A7, fully disallowed. Advance income tax is a personal nature. Any advance tax also personal, disallowed. GST, business nature. Late fee paid in GST, any late fee or penalty, fine charged by any act, disallowed. Income tax also personal nature, disallowed. Depreciation, advertisement, general expenses, these are all business nature. Income tax appeal expenditure. Income tax appeal is a business nature. But income tax is a personal nature of a businessman. But income tax appeal relates with his business, so it is allowed. So this businessman shows 1,62,000 as his net profit with the adjustments. Depreciation as per income tax rules amounted to 8,000. What is the amount of depreciation recorded in the P&L account? 5,000. So this 5,000 will be add first. In the adjustment, 8,000 will be deduct in the income chargeable other rates and other allowed expenses. First one. Second point, advertisement was paid in cash. Yes. Section 40, subsection A3 states that if any expenditure exceeds 10,000, the mode of payment must be through check or bank transfer, but not in the form of cash. So what's the total amount of advertisement debited in the P&L account? Advertisement 12,000, which exceeds more than rupees 10,000. So 100% disallowed under section 40, subsection A3, 12,000. Next one, bad debts recovered, of which 2,000 was disallowed earlier. Bad debts recovered is an income, 8,000. Out of 8,000, 2,000 were disallowed earlier. That means already for 2,000 tax amount charged in the previous year itself. So no need to again charge the tax on this 2,000. If you charge it, it may goes under double taxation. So to avoid double taxation, this last year disallowed nature 2,000 will be deducted now. Last year disallowed amount deducted from the income from business. So first we covered all the adjustments. Now we go for the debit side of the expenditure account. Number one, salary allowed, no need to add. Office expenses allowed. Rent allowed. Acquisition of patent right. Under section 35A, total amount 18,000. 1/4 allowed. That means 4,500 allowed. Balance is 13,500. 3/4 disallowed. Next one. Provision for bad debts. Under section 40, subsection A7, any provision disallowed. Advance income tax disallowed. GST allowed, business nature, but late fee in the GST disallowed. Income tax disallowed. Depreciation we already gone through. Advertisement also gone through. General expense business nature. Income tax appeal also business nature. So add all these things and deduct these things. The actual income from business will be 1,50,500 only. Okay, in the same pattern, the listeners can practice exercise 3. Now we go for practice 4. Mr. Akbar John prepared the following profit loss account: by gross profit, by sundry receipts, by income from other source, by capital gain, by miscellaneous incomes were shown. Totally 5 income items. A debit side to salary, rent, depreciation on plant, purchase of motor car. It is a capital nature. By mistake entered as a revenue item. So we should be very aware. Car expenses, neon signboard, also capital nature. By mistake it was entered as a revenue nature. General expenses to net profit 2,80,000. With adjustments, depreciation on plant as per income tax rules amounted to 24,000. Shall we start the answer in the shortcut method? Yes. Go for computation of taxable income from business of Mr. Akbar John. First start with the net profit as per P&L account. Add disallowed expenses. Leave just 10 lines gap. And the less incomes are chargeable to other rates and other allowed expenses, leave just 5 lines gap. First, go to the adjustments. Depreciation on plant as per income tax rules, 24,000. So what is the depreciation debited in the P&L account? 20,000. That 20,000 add with the profit. And as per income tax rules given the adjustment, please deduct this 24,000. under income chargeable to other rates. Second adjustment, general expense include 24,000 for household expenses. The total general expense debit in the P&L was 60,000. Out of 60,000, 24,000 was a non-business nature, personal. So add it with the profit. Okay. Yeah. Next, 50% of motor car expenses related to personal use. Charge 15% depreciation on car. So any car information? Yes. Purchase of a car. Purchase of a car is a capital nature. So add 100% here. And in the deduction, we have to charge depreciation on car, 3,60,000. Car pertains to 15% rate of depreciation, and 50% of the car used for its personal use. So balance 50 only for its business. That is depreciation on car. As per income tax rules, we have to charge depreciation. So amount will be 27,000. 27,000. One alignment mistake is here. Please excuse me. Next one. Car expenses 16,000. Out of 16,000, 50% is a personal nature. Add it with the profit. Next one. Neon sign board. Advertisement is a capital nature. Add it. Only 5 items we have to add. General expense, business nature. That's all. Now income side, gross profit, business income. Sundry receipts, business income. Income from other sources and the capital gains, deduct it from the income from business. So the actual income from business is 1,65,000 for Mr. Akbar John. But here, income from other sources and capital gain were wrongly entered. That's what his business income was hiked here. So our purpose is we have to compute the actual income from business of the businessman. It only ensures the business entity. Okay. Now, in the same pattern, the listeners can practice exercise 4. Now see practice 5. Mr. Jagdish prepared the following profit loss account. Compute taxable income from business. Income side, gross profit, commission, sundry receipts, bad debts recovered, earlier allowed as deduction, earlier allowed, already it was allowed. That means we already record as a bad debts. Now that bad debts are recovered, so it's a business income of the current year. No need to deduct when information given as earlier allowed as deduction. See, the income side, no deductions. Okay. Next, in the debit side of the P&L account, general expenses, rent, advance tax, staff salary, salary to Jagdish, that means the drawings, interest to brother, advertisement, other expenses, depreciation, and the net profit shown only 2,10,000. With the adjustments, depreciation allowable is 30,000 as per income tax rules. So in the same pattern, how to finish? We can go for the answer. First, computation of taxable income from business of Mr. Jagdish. Net profit as per profit loss account 2,10,000. Take it. Add disallowed expenses section 28 to 44D. Leave 10 lines gap. Less incomes chargeable to other rates of income and other allowed expenses. Leave just a 4-line gap. Now go with adjustments. Depreciation allowable is 30,000 as per income tax rules. What is the depreciation debited in the P&L account? 24,000. Add it. And the depreciation, what was the amount given adjustment? Deduct it. Second point, general expense include 24,000 for agricultural extension projects and rupees 20,000 for water conservation activities in and around the business site. It is a corporate social responsibility activity of the business, so it is business nature allowed. Okay, actually, yeah, contribution to agriculture extension scheme were fully allowed under section 35CCC, and the contribution to youth skill development scheme was fully allowed under section 80CCD. Allowed, no need to add to the profit. Next, 50% of the rent is for residential portion of Jagdish. So what was the rent debited in the P&L account? Rent 36,000. That means half a portion of this property occupied for his residence. So 50% only business nature. Balance of 50% of the rent is a personal nature. Add it with the profit. Rent 50%. Next, Fourth information. Income of rupees 20,000 accrued during the previous year is not recorded in the profit loss account. Income accrued. It should be credited in the P&L account but should not credited. So if the income item we credited 20,000 means it may increase the profit. So we have to add the item. Accrued income not recorded earlier. Add it with the profit now. Next. Jagdish pays 6,000 as a premium on the life of his wife, which is included in general expenses. What? How much general expenses? Total general expenses was given in the P&L account 80,000. In that 80, 6,000 LIC premium of on the life of his wife is included. So that is personal nature, that should be added. Next. Interest to brother, which is unreasonable to the extent of 6,000. Any interest payment to close relatives. Here, actually, the amount debited in the P&L interest to brother 24,000. Out of 24,000, 6,000 is unreasonable, so that should be added with the profit. Shall interest to brother. Now, we can go through the debit side one by one. General expense business nature, no need to add. Rent business nature. Advance tax 10,000, we have to add. Advance tax personal. Next, salary to staff business nature, but salary to Jagdish is a personal nature. Drawings that should be added with the profit. Next, interest to brother already covered. Advertisement finished. Other expense okay. Depreciation okay. Now income side. Gross profit, business nature. Commission, business nature. Sundry receipts, business nature. Bad debts recovered, business nature. Only the adjustment depreciation we have to deduct. So balance of 3,12,000 is income from business of Mr. Jagdish. But here it shows only 2,10,000. Okay. So to verify the actual income from the business activities, income from business is an important head. In the same pattern, the listeners can practice exercise 6. Okay, right. We'll see the next video. Good luck.